Dangote Cement has reported a 46.1% increase in Q3 earnings per share to just over 9 naira. Joining me in the studios now to talk us through the numbers is Devakuma Edwin, the CEO of Dangote Cement. Thank you so much, Mr. Edwin, for joining us. So, our previous guest was very complimentary of the growth we're seeing in Dangote Cement. So, let's start with that. What is driving the efficiency? He pointed to the fact that pretty much it's all new factories. Over the last 5 years, we've seen that you've really deployed new factories, particularly in Nigeria. But is there anything more that is driving the efficiency we're seeing in your company now?
Well, see, we can keep on adding factories and adding production, but the goods are to be sold. And if you look at how we are taking up the market share, consistently we are increasing the market share. So our primary focus is not just to introduce additional capacities, but to ensure that whatever we are introducing is sold. And the last time when I was here, the question was asked, how are we going to spread out these volumes? Would we have to export? I said, yes, we have an export backup channel, but we would try to push everything into the local market, which is what we are doing currently. So the focus is not just on the production, but on sales and logistics to ensure that whatever we are producing is put into the market. And that is how we have been able to maintain this kind of EBITDA growth.
Right, and of course your sales numbers were also very positive, well over 20% this year. But let's talk a bit about your expansion across Africa. The guest just mentioned as well the plans to go into Senegal. Can you just give us an update on that transaction?
Yeah, the Senegal plant, as you know that there was a little bit of a legal hitch earlier. Yeah. That we have cleared the case in the Supreme Court, and the work has commenced. Actually, started about 2 weeks back, and the power plant testing will start towards the end of next month, and then the cement plant commissioning will start.
All right, and if we look outside Nigeria, can you just give us a sense of your expectations for expansion of your footprint across Africa? Yeah. We know you've invested in South Africa more recently. Yeah. So how much, for instance, would Africa be contributing to the company's bottom line in the medium term?
Well, by the middle of next year, our Nigerian capacity will grow to 29 million tons. And we expect the rest of the African production to come up with at least to bring our capacity to 50 million tons. Right. So we are looking at about 21 million tons capacity. Some of it is in the form of integrated plants, some of them in grinding plants, some of them in cement terminals. As I said, early next year, our Senegal plant will start, and more or less simultaneously the South African plant will start. By January, the grinding plant part of the South African plant will start, and then the full integrated plant will start early second quarter. That would be followed by Zambia, which will also commence operations next year. And the next subsequent year, the operations in Ethiopia will commence, followed by Tanzania, Kenya, South Sudan, and Republic of Congo. So our production capacities will continue to increase annually.
Right, so you're clearly bullish about Africa, but let's come back to Nigeria. And what's the outlook for the industry here? A lot of people have suggested in the past that there may be major changes with respect to the pricing structure of products here. How do you see that playing out? Because that obviously will be key in terms of protecting these very incredible margins.
Well, I'll tell you two issues. One is the capacities growth in Nigeria. The consumption growth has been pretty good this year. It has grown by 16%. Number two, the per capita consumption in Nigeria is still quite low. So there is a substantial opportunity for growth. And number three, there is a huge housing deficit, and there is a deficit investment on infrastructure. So consumption will continue to grow. But talking about the protection of the EBITDA margins, which I said is attractive, I'm in a very unique situation whereby it's my competitors and the government which should be keen to ensure that my margins are protected. Because you can see my competitors' EBITDA margins and mine. So if I drop the prices by say 25% and trying to take a lower EBITDA, my competitors' EBITDA would get wiped out, and they would not be able to compete. And the government wouldn't like to have a monopoly situation.
Right.
So what I have done is actually, it's not that I'm trying to make more money. We have invested massively in better technology, which is giving me these EBITDA margins, and which will be protected by all outside stakeholders and they will be more interested in protecting my margins.
Right. Let's talk a bit about some of the. You have quite a few factories across the country. I just want to touch a few of them. Maybe the Boko plant in particular. We know that was one where you actually had to bring down the old plant and create a totally new one. How is that working out?
Well, if you see, still Boko is among the entire portfolio we have in Nigeria. It has the highest cost of production because it doesn't have gas. And so what we do is currently we maximize the production efficiencies of Bajana and Nibeshe plants, and then whatever is the rest of the gap which is coming up is filled up by the Boko plant. But we have already applied for the approval for the gas pipeline connection to Boko. It's a 350-kilometer pipeline, which we would invest in the pipeline. And approvals is on the threshold of getting released.
Right. Okay, let's look at Ghana, and I want to talk about exports now. Sure. Looking at your West Africa footprint, how is that working out?
Well, there is already a terminal operating in Ghana, and we are handling an expansion there. And the Cameroon, we are putting up a grinding plant to export clinker from here. That will also get commissioned next year, the second quarter of next year. And the Sierra Leone plant would also get commissioned in the second quarter of next year. And the other projects are in a comparatively earlier stage, like Ivory Coast, Liberia, Guinea. And we are also opening up export channels to Niger and to Chad, so which we have already sold some cement. So the expansion plans are on growth, are on control, and we are also putting up an export terminal in Apapa.
Right, but isn't there a risk that you're doing a little too much at the same time and you're expanding so many African countries back to back? So there's a sense that maybe you are doing a little too much. How do you react to that?
Well, you see, today the 95% of the shareholding is controlled by the key investor, nearly. And so obviously, a person who has put all his money inside the business would like to ensure that his risks are minimized. You know, if I am going to be playing with a lot of public equity funds or playing with a lot of bank financing, my risk appetite would be more. But when I'm dealing with, the investor is dealing with his funds, obviously his risk management levels are extremely high. He wouldn't like his investment to get into trouble.
Right.
So as much as we are expanding fast, our risk management planning and controls are in place, so we don't enter into any country where we perceive there is a risk.
Right. Final word on capital raising. What can we expect? Is all this going to be financed by debt and perhaps internally generated revenues, or is there a chance that perhaps you will come to the stock market to do a public offering?
Well, see, mostly it's going to be funded by internal generation, and there will be a certain portion of debt anyway to make the operations more efficient. And capital market, yes, we would have to go in for the capital market, because the only reason we are not going in immediately is that the Nigerian Stock Exchange has a limitation. And
you had a plan to go to London, right?
To London, yeah.
Is that still on track?
It's, whatever is required for that, we have already put in place. We started with the implementation of IFRS, SAP, risk management, corporate governance, external directors. There are whatever is required for a premium listing in the London Stock Exchange. We have already put everything in place. So anytime we need, we can go in for it.
Well, we look forward to that listing. Thank you very much for joining us on the show today. Devakuma Edwin is the CEO of Dangote Cement.